A wise man once told me that you should pay attention to people's actions and not just their words. In light of governments and central banks and organizations, institutions worldwide getting into the green game, or greening the economy, the Federal Reserve has explicitly said that they'll stay out of it.
But without explicit congressional legislation, it would be inappropriate for us to use our monetary policy or supervisory tools, for example, to promote a greener economy or to achieve other climate-based goals. We are not, and we will not be, a climate policy maker.
However, his words do not match the actions of the Fed, and they are indeed getting involved in greening the economy and climate policy.
It seems like they are doing a lot of those things anyway. I mean, I'm glad that he's saying that and saying the Fed shouldn't be doing this, but it seems like they are doing some of those things. And so if he's being honest about what he thinks the Fed should do, well, then they should stop doing some of these areas that he says aren't the Fed's job.
To talk about this, I sat down with Thomas Hogan, who is senior research faculty at AIER. He was also formerly the chief economist for the U.S. Senate Committee on Banking, Housing, and Urban Affairs. So Tom is a perfect person to talk to about these kinds of things. He's always keeping track of what's going on at the Fed and if they're indeed doing what they're saying they're doing. And what he's found is that over time, the mission creep just keeps expanding.
So recently, Jerome Powell, that is the chair of the Federal Reserve, the Central Bank of the United States, he gave a talk where he said that the Federal Reserve should not be a climate policymaker, and that is a job left for Congress. But it's not clear to me that he really means that. It seems like some of the things that the Federal Reserve is doing are clearly intended to set policy.
So they're saying one thing, they're doing something else. And that not only applies to climate policy, which we can discuss a little bit later, but first let's talk about what they're actually saying about climate policy.
Right. So Jerome Powell gave this talk recently at a conference in Stockholm. He was on a panel called Central Bank Independence and the Mandate Evolving Views. So this is changes in what people are viewing the central bank's responsibilities to be. And of course, the Federal Reserve has an explicit mandate assigned by Congress. And so, it's not clear that they can really just change that on their own. They have a little bit, which we can talk about later.
Yeah.
But let me read you a couple of quotes from his talk. So Powell focused on the Federal Reserve being independent and whether or not they should be doing climate policy. And he said, he said they should, quote, stick to our knitting and not wander off to pursue perceived social benefits that are not tightly linked to our statutory goals and authorities, right? So he's saying we've been assigned this goal by Congress. We need to stick to that. He later said that they should resist the temptation to broaden our scope to address other important social issues of the day. And social issues is also an area that the Federal Reserve has been getting into, even though, he's saying we really shouldn't be doing that.
Yeah.
In terms of bank regulation, he said, independence in this area helps us ensure that the public can be confident that our supervisory decisions are not influenced by political considerations. So, saying we're staying out of politics, it's not clear that they're actually doing that. And he says, these are things that really should be done by Congress. The Federal Reserve is an independent agency. If the elected officials want to do some kind of climate policy, that's really their job. He says, the Fed shouldn't be involved with things that, quote, have significant distributional and other effects on companies, industries, regions, and nations. And so really the important thing that he's talking about here is whether they should be pushing banks to lend to green energy companies to help develop the green energy industry and cut off fossil fuels or cut off other things that might affect climate change, right? And he's saying that's not our job. That's something Congress should be doing. The Federal Reserve doesn't have the authority to do that. And then in closing, he said, quote, without explicit congressional legislation, it would be inappropriate for us to use our monetary policy or supervisory tools to promote a greener economy or to achieve other climate-based goals. We are not and will not be a climate policymaker.
Well, That's hopeful. Those are hopeful words. Does
Right.
the rhetoric match the action?
Yeah, so on one hand, I think it's good that Powell is saying these things. I think the Federal Reserve is being pressured to go very far in the realm of deciding what's happening in the financial system, deciding what companies and what industries should be getting funding and what industries should be growing and not growing. And so, he's at least resisting that. He's saying, look, we shouldn't be involved with distributional effects on lending. We shouldn't be involved with social issues. We shouldn't be involved with political considerations, and we should not be a climate policymaker. But as you mentioned, it seems like they are doing a lot of those things anyway. I mean, I'm glad that he's saying that and saying the Fed shouldn't be doing this, but it seems like they are doing some of those things. And so if he's being honest about what he thinks the Fed should do, well, then they should stop doing some of these areas that he says aren't the Fed's job.
Right. One thought that comes to mind is that he's not the only person at the Fed, though, right? And I think we've spoken before, maybe on a podcast or off camera, about inner tensions at the Fed as well. So
Right.
perhaps that plays a role in some of these words not living up to the actions.
I think it's certainly the case that some people within the Fed do want the Fed to be doing climate policy, and some of the things that Powell is maybe considering to not be climate policy will have the distributional effects that he says they shouldn't have.
So Jerome Powell was actually put into his position at the Fed during which administration? And I know they're not supposed to be political, but was it during the Trump administration?
So he was appointed to the Federal Reserve Board of Governors in the Obama administration, and then he was elevated by Trump to be the chair of the Federal Reserve.
I see. Okay.
Right.
Okay. So, I mean, that's, it was just a question that I had because I was thinking, well, maybe he has certain political leanings
Right.
that are influencing the way that he's behaving here and what he's saying.
Yeah, so Jerome Powell, when he was first appointed, he was appointed by Trump, but then pretty soon after, started getting a lot of criticism from Trump. Trump was calling him out about Fed policy, and Powell largely resisted that. And so he was seen as being very independent, very, very resistant to political pressure. But that was pressure from the executive, pressure from the president. Mm-hmm. He was actually very involved with Congress, meeting very frequently with the Senate and House of Representatives and going in and talking to people. And I'll tell you, I was formerly the chief economist of the Senate Banking Committee. And so I early on thought that was great. Hey, finally people at the Fed are coming and listening and talking to Congress. But I think maybe those relationships made him a little bit more influenced by political pressure once things became more difficult, once we got into the COVID period and then saw all this inflation and the things that have happened since. I think maybe he has succumbed a little bit more to political pressure than some of the previous Fed chairs.
Right. It could be a little bit of a public choice question as well. So about incentives, right?
Right.
So, okay, what are the kinds of regulations that the Fed has actually made in regards to climate policy already?
Right. So the Federal Reserve is the central bank of the United States. And so their main job is to do monetary policy. The central bank controls the money supply. And so the Fed tries to keep the economy growing at a regular pace, not have a big boom and bust in the economy, and not have too much inflation. Obviously, they have not done very well at the inflation part of that lately, but they have a dual mandate of low unemployment and low inflation, and that is their goal dictated by Congress. But that's for monetary policy. They are also the regulator of the banking system. And so in that capacity, they're regulating banks to make sure that the banks aren't taking too much risk. And if there is a problem of the banking system, say a widespread problem of bank failures or illiquidity, then the Federal Reserve can lend and act as a lender of last resort.
Right.
And so they're regulating the banks to make sure that the banks aren't taking too much risk. And this is the area where Powell is saying, this is appropriate. We should be creating regulations that if there's some kind of risk to climate exposure, then we need to be making regulations to make sure that banks are going to be okay and not have widespread failures.
Let me just pause you there. Climate exposure.
Right.
What is that?
So that is a good question. So basically, the idea is that there could be unexpected climate events that cause banks to all have problems at once. Like, for example, they may be lending to a lot of agriculture loans that affect farming, and if there were some kind of weather events that cause widespread crop failures, or if they're all lending to coastal properties, people's beach houses that once the climate gets bad and the sea level rises, those all, those homes get destroyed.
Day after tomorrow kind of situation.
Yeah, so some kind of event like that. And so the idea here is that the Fed is going to be making sure that banks have policies in place to limit their risk exposures, and that the Fed is going to monitor those to make sure that the banks aren't taking too much risk. And so those are developing in a couple of ways. The first one that they've started doing is they've started doing what they call climate stress tests. And so what they do is they look at the bank's balance sheet, and they say, okay, so what if there was this extreme weather event, or if there's this strange climate event that affects a whole bunch of your assets? How is that going to affect the rest of the bank? Are you going to fail? Are you going to become illiquid? What are the problems it's going to cause? But there's a couple of problems with this approach. One is that those climate events are basically made up. I mean, they're in a literal sense that the Fed just says, well, what if this weird thing happened, right? And we don't have any idea about whether that real thing has any probability of happening in the real world.
Like there's no precedent in place.
Exactly. And they haven't been very clear about exactly the way that they're doing this. And so, we need more transparency about how it's being done. Yeah. But a bigger problem is that a lot of the climate-related events are things that would happen slowly over the course of decades. We're not worried about like the International Panel on Climate Change. They're not worried about what's going to happen next year. They're worried what's going to happen by 2050 and 100 years from now, basically. And so those kind of long-term events aren't really things that we typically worry about in terms of bank solvency. We're worried about this emergency event that happens all at once and affects the whole banking system. If it happens slowly over time, then that's not a big problem because banks can mitigate those risk exposures. If there are some banks that are more effective, maybe those banks fail and they get bought out by other banks. But it's not like every bank in the banking system is going to suddenly be hit by this one event if it's something that happens, over the long term.
If it happens at all.
If it happens at all, right. So we don't have any real information about that. The Fed doesn't really know about it. Previous Fed chairs have said, like, we shouldn't be involved with areas that we don't know about, and this is an area that the Fed doesn't really know about, right?
Yeah.
And so one problem is that we shouldn't be really worried about these long-term trends, and we don't have any evidence that these are going to be immediate events that would really affect banks.
Yeah.
Another thing is that those types of events are things that banks are already facing. Banks that lend to coastal properties, they already get insurance for that. Banks that lend into houses in flood zones, they get insurance for that, right? When I owned a house that was in a flood zone, I had to have flood insurance. And so all these kinds of weather events are things that are well known, that we have insurance for, that we already have regular risk mitigation for. And so there's no reason to think that this is any different than other things that banks are already doing. And so it's strange for the Fed to pose this without presenting any evidence that this is some unusual case that they need to be protecting the banks from when there's just no evidence that that's the case.
They're doing this, in my understanding, based on a narrative rather than based on evidence.
Right.
Yeah.
Yeah, so that's a big problem. So the climate stress test is the thing that they're doing now. And that actually has two parts when they're looking at this. One of them is that they're looking at those weather events. The other one is that they're actually looking at how banks would respond to policy. So let's say the government makes some law that the banks can't lend to certain industry, like how would that affect the banks?
Like fossil fuels.
Yeah, but the Fed's in charge of that, right? And so the policy too is something that the government would cause, and presumably that they would think in making that law, well, is this going to cause banks to fail or not, right? It wouldn't be a surprise in that case. And again, if it doesn't happen immediately, if the banks have time to mitigate that risk, then that's not something that we would normally worry about for bank regulation.
You just said something there, though, if it doesn't happen immediately. And that's something to think about, because you have to wonder why they're doing these things. And I mean, you might have ideas about that, but nobody really has the answers to why, right?
Yeah, and Jerome Powell is saying they're not doing these things, right?
Right,
He's saying we shouldn't
right.
be involved, but it's clear that some of the Fed's policies are having distributional effects, are being affected by political pressure, even though he's saying, they shouldn't be.
And distributional effects, can you just explain that a little bit?
In terms of who banks are lending to,
Okay.
whether what sectors of the economy are going to benefit and what sectors are going to lose.
Right, I see. I know that there are other countries in the world who have been doing that already for a while, basically since the COVID recovery started. They've been saying, hey, we're not going to bail out these industries. We're going to only bail out industries that go towards renewables and
Right.
things like that. So now it looks like maybe America is catching up with that.
Yeah, so it's been the case for a long time that although not specified in regulation, the Fed appears to be, or bank regulators in general, appear to be behind the scenes pressuring banks to not do things that are politically unpopular. So, a lot of banks have complained that, hey, we're being pressured not to lend to gun companies, not to lend to cigarette companies, not to lend to marijuana companies, not to lend to crypto companies, all these different areas where the regulators, there's no law against it, but the regulators say, that really might be risky and you might want to stay away from that. And they won't specifically say because there's, again, no law or rule.
Right.
But they kind of informally pressure them not to do that. And so that's happening at least a little bit. But Powell is saying, like, that's not our job. We shouldn't be pressuring banks to lend to some industries and not lend to other industries. But it seems like their regulations are having that effect anyway.
So are there any other actions that the Fed is taking that come into conflict with the statements that you read earlier? Any other things that the Fed are doing on climate policy?
Yeah, absolutely. So the distributional one is one that even though Jerome Powell is saying we're not here to support a green energy movement or something like that, it seems like that's exactly what they're doing. And in fact, there's a specific case where they're doing that, that they have joined an international group of central banks that is called the Network for Greening the Financial System. So you can tell just from the name, Network for Greening the Financial System, the goal of this organization is to increase lending and development of green energy industries and not have as much or deter development of fossil fuels, right? And so let me read you just a couple of quotes from their website about their origin and their purpose.
Yeah.
So their stated purpose here is, one of their purposes is, quote, to mobilize mainstream finance to support the transition towards a sustainable economy, right? So they're explicitly trying to affect where banks are lending to encourage the development of green energy. If we even know what that is, I should say green in quotes, green energy, right?
Yes.
Because some of those things aren't always green.
Mm-hmm.
They also say their purpose is, quote, to help strengthen the global response required to meet the goals of the Paris Agreement. So, this is an international agreement about climate change. To enhance the role of the financial system to manage risks and to mobilize capital, right? Mobilize capital, that is, dictate where the banks are lending. Mobilize capital for green and low carbon investments in the broader context of environmentally sustainable development. So this is a group that is explicitly dedicated to promoting green energy and growing that industry, when Powell is saying it is not our job. In fact, he's saying we won't get involved with promoting the green energy industry. And yet they've promised to be involved with promoting the green energy industry. A complete contradiction, right?
How? how does that happen? I mean, how do you get away with doing that kind of thing?
Right, and it's funny because when they joined this, it wasn't just something that happened that Powell didn't know about. He's the one that came out and made the announcement that they had joined this. And so he's aware that they are a member of this. Maybe he hasn't read the mission statement or the purpose of this organization. But again, you would think even from the name, Network for Greening the Financial System, he would know that is the goal of this organization.
There must be some kind of incentives there for him. Maybe if he is being honest in what he's saying, and I'm just speculating, maybe he thinks that it's not, that it's, I know decades ago, you could sign up for these kinds of things, say, yeah, we're going to take part in this, in building a more sustainable future. Like, it's not anything that's really, really new. It's been around for a while, but countries weren't actually doing it. They were just kind of virtue signaling about it. Do you think that there could be some naivete there on Powell's part?
Yeah, so I think his comments here are partly. So again, he's like partly serious about it and partly, in my opinion, not. So I think he's serious that the Fed is being pressured to take a larger role in this. People are telling them they should specifically be discouraging banks from lending to fossil fuel companies and encouraging them to lend to green energy industry. And he's saying, no, we can't do that. But he's not taking as seriously as he should the Fed's actual policies, the things that they're doing already, because it's pretty clear that they're going to have that effect whether it's explicit or not.
Right. And this is a serious thing. I saw a video a couple of months ago. I was doing research for another video and I was trying to pull on certain talks that were had between bankers and NGOs and finance people. And I'll have to maybe put it into this video here. I don't remember exactly who was talking, but they were speaking, I believe, with Mark Carney about how they asked basically, so what should we do about aviation? Like, will that become a stranded asset? And these were the kind of things that, 300 views on YouTube or something like that. Like, there weren't a lot of people who were really watching this. It was kind of one of these talks that just happened to be put up that most people aren't aware of. So, asking those kinds of questions coming from somebody in the banking system, like, that's a serious question, right? So these kinds of things obviously do have very real world consequences.
Right. So Powell has actually talked about this before. In fact, he used the term climate policymaker, I think, back during the summer and even back a year ago, I think in late 2021. But it didn't get very much press at that time because the Fed wasn't as involved as they are now. Since that time, after he said we're not going to be a climate policymaker, they started doing more regulations and getting more involved with things that would have the distributional effects, things that where it seems like the Fed is being a climate policymaker, even though they're claiming not to be. And so it could have been that after he said it, we would have known he was serious if they hadn't done any of this stuff. But now that they're continuing down this path and he's still saying we're not going to be a climate policymaker, now it makes people question it a lot more.
Yeah, that's kind of like a misrepresentation, and that's a nice way of saying it. Right.
Yeah, I mean, he specifically said we're not encouraging the green energy industry, but he committed to a organization that's dedicated to doing exactly that. And so it's hard to see how that's not a contradiction. Like, one of those things can't be true.
Yeah.
Either you're trying to encourage the green energy industry or you're not.
Yes.
And it can't be both.
Yes, it's a very black and white thing. And people are loud about it as well. So, you've pointed out you're always checking to see what the Fed is doing in the work that you do. There have been instances in the past as well where the Fed has basically said one thing that turned out not to be true. Can you maybe, spin out a couple of those examples?
Yes. So one of the areas, some of these are explicitly about the areas that Powell was just mentioning, social issues.
DEI.
DEI, distributional issues about who gets money and who doesn't, right? And so those are things that the Fed for a long time has always said, look, we want to be independent. We want to be outside of political pressure. We're not going to do things that just benefit one group at the expense of another group, right? Essentially taking money away from some people and giving it to other people. That's not our job. If Congress wants to do that, then they should do that. But the Federal Reserve, it's not part of our mandate and it's not something that we should do. And so in those different areas, the one social issues, they have gotten more involved with trying to affect the problem of inequality in the United States. So in terms of income or wages or employment, this is something that for decades people have been pressuring the Fed to try to get involved with this area, and they've said, look, we just can't do that. That's not our job, and it's not something that we can affect. So specifically, one of the specific areas, so the Fed has this dual mandate of low unemployment and low inflation, right? And so people have been saying, well, unemployment is part of your mandate, but if we look at minority unemployment rates, they're higher than average or they're higher than whites. And that's true. But if we wanted the government to address that policy, it's not clear that the Federal Reserve should be involved with that. And so, again, for years, people have been pressuring the Fed to try to do something about the problem of high minority unemployment rates. And the Fed chairs have always said, look, that's not something that we can do.
Yeah.
First of all, it's not part of our mandate from Congress. Congress has assigned us this very specific mandate. But second of all we can do is manage the money supply. We have this tool of money that affects the whole economy, and we can't just pick out one group to affect and not affect some other group. And so we really just don't have the ability to affect problems that are distributional, that are inequalities of income or wealth or employment. And so previous Fed chairs had always said, look, we just can't do that.
Yeah.
Ben Bernanke, who is the chair of the Federal Reserve, was asked about this and said, look, that's not our job, and even if we wanted to do it, we can't because of, our tools just don't allow us to do that.
Right.
Janet Yellen, who is now the Secretary of the Treasury, is very interested in the problem of inequality, and at the Treasury is trying to get more policies to try to affect this issue, reduce inequality. But when she was chair of the Fed, she had the same response. She was asked, and I remember, like, when I was chief economist of the Senate Banking Committee, I was at a hearing where Janet Yellen was asked about this. I was sitting right behind Senator Shelby, who was the chair of the committee, and a bunch of the other senators had gotten together and intentionally coordinated a sort of attack on Yellen to ask her, what are you doing about minority unemployment rates? And, she said, look, I think that's a very serious problem. I think they probably didn't know that she actually did. Like, she's done research on that and is an expert on this problem.
Right.
But they were asking her, like, what are you doing about minority unemployment? And she said, I think it's a very important problem. We're looking into it. And then she was asked about it again and again. And finally, after the third or fourth time, she finally said, look, that's an important problem, but it's not something the Fed can fix. It's a long-term structural problem that can't be solved with monetary policy.
Right.
And so even though now we know, as Treasury Secretary, she's trying to fight for that and have more policies that would affect inequality.
That's part of her moral leaning.
She wants that. But as Fed chair, she was honest enough to say, we just can't do that. That's not something monetary policy can fix. If Congress wants to try to handle it through fiscal policy or something like that, they should do that. But we can't do it. In fact, even Jerome Powell said this. Early in his tenure, Jerome Powell said, it's not something monetary policy can fix. The best thing that we can do is try to get all unemployment rates down because that'll affect the average and also affect minority unemployment.
Right.
Yeah. So despite all this, despite saying for decades that the Fed couldn't be involved with this, in 2020, they changed their policy and decided, we've always said we can't affect income inequality. We're going to try to affect income inequality, right?
Yeah.
And so they changed their policy. And the way that they did it was they said, so Congress has assigned us this goal of maximum employment or low unemployment. We're going to redefine the way that we interpret that goal to be inclusive so that we can look at minority unemployment rates. In Powell's speech, when he announced this new policy, he specifically cited, higher minority unemployment rates compared to the average. And so he said, we're going to try to get that down.
So all within existing law. I guess that's the problem with a lot of these things.
Yeah, so the law is that the agency has the ability to interpret its mandate, and if Congress wants to change that, they have to write a new bill to rewrite the Federal Reserve Act to make it more specific. So they changed their interpretation of this mandate, and they've said previously, look, money affects the whole economy. But the way they changed it was they said, okay, so we admit money affects the whole economy, minority unemployment rates are higher than the average, but that difference is big when we're in a recession and it's low when we're in a boom period. And that's true. So if we look at the decade prior to the COVID crisis, say from 2009 to 2019, we had a big booming economy for a decade, and sure enough, unemployment rates came down, and the gap went from being very big to being very small.
Right.
And so what the Fed decided they would do is try to squeeze a whole decade's worth of growth into just 1 or 2 years, right? And so they said, we're going to stimulate the economy until we get to maximum employment. And you can see Powell saying this throughout 2021 again and again, maximum employment, right? Over and over. even though inflation was all around them. At the start of 2021, they were saying, look, it's just transitory. By the end of that year, Powell had said, we're going to retire the word transitory, right? We're admitting that this is no longer a supply problem, that it's caused by Fed policy, but we're still going to push till we get maximum employment. At the end of 2021, he was saying, I think this was in November, he said, it'll probably be another 6 months, or it'll probably be the middle of next year before we hit maximum employment. So despite the fact that inflation was all around them, he was still saying, we're going to continue pushing the economy for another 6 months until we hit this maximum employment goal.
And your theory there, basically, I think this was in a video called The Fed Has Gone Woke or something on AIER's channel, which is that...
Right, we've talked about this before.
And that's the idea, right? Well, let's do this. We're going to do this without saying what we're doing it for, but we're actually doing this because of the DEI thing,
right?
Because we want to have more equality.
Yeah. So even though Powell had said, there's nothing we can do about inequality, they decided to address it anyway. And even though he still said in the speech, this recent speech, we're not trying to affect social issues. Right? We're not listening to political considerations. Mm-hmm. It sure seems like that's what they're doing.
So we have to look at consistency. This is Powell's consistent kind of modus operandi, which is I'm going to just say this one thing and I'm going to do something else and I'm going to keep saying it until that thing changes. And it's so noticeable that people can no longer say I haven't been doing it.
Yeah, and with inflation, that was clearly the case because everyone saw that there was inflation and finally that became a big political issue. But in other areas, it's not clear to me that anyone really notices this. I mean, I think the recent comments that he made that he said, look, we're going to stay out of climate policy. I think a lot of people celebrated that and said, great. People that are critics of that policy said, thank goodness he's promising they're going to stay out of climate policy without looking too deeply about, well, what are they actually doing?
Yes.
Right. And not realizing that
that's a danger. That's
true.
Actually a danger because if people are not prepared to act accordingly, right, then that will just blindside them, and then it will be kind of maybe really entrenched.
Right, and it's funny that no one notices these things and no one asks about them. So I wrote an article maybe 6 months ago about when every 6 weeks the Federal Reserve has a meeting. The Federal Open Market Committee meets to decide the stance of monetary policy, and after that, Chair Powell does a press conference, and the questions that he gets are very, not silly, but very small, and they're typically people that are financial reporters trying to get him to give some hint about what their policy is going to be or how it's going to change. Basically, are they going to raise interest rates by how much and how quickly? And typically, he just kind of avoids those, and it doesn't really give any information away. But no one asks about these fundamental policies. No one asks about the statements that he makes that clearly contradict the Fed's own policies.
Right.
And so, it seems like people are mostly just not interested in that, either because they don't know or because they're just giving softballs and don't want to be too critical of the Fed.
Maybe a mix of both.
Maybe a mix.
That's the likely scenario, I would think. Yeah. And for some people as well, they probably think this is a good agenda anyway.
Yeah, right. I think a lot of the reporters probably are on the left and would like the Fed to be more involved with climate change. And so they're not going to question it too deeply, right?
No. Well, I know in other countries you could see the effects of these policies, right? Like if you look at Europe, you look at what's going on over there, you look at Canada, you see the cost of fuel over there, it's much, much higher. And already, in the US, you're seeing these things that have grown with inflation. But if these green policies really continue to cement themselves, it's going to really change things.
I mean, you see this even here in the United States that Biden ran on a policy. I mean, one of the things that he talked about was ending oil production, right? And ending the fossil fuel industry in the United States.
That's a serious statement.
And then a few years later, when we have high inflation and high oil prices, he reverses and says, oh, I'm going to do whatever I can to support the oil industry, and we're going to get the price of oil down, and America's going to be a major oil producer.
That's
you
right.
know, and why aren't those oil producers producing more, right? And well, you've been threatening them
greedy,
for
right?
your
And they're
entire
greedy.
career.
Yes,
And
yes.
so, of course, they don't believe you when you say, "Oh, now we want you to start producing more."
Right.
Suddenly, when it's a cost to them, you know, not just Biden specifically, but the left in general that's
Yeah.
trying to end the fossil fuel industry.
Right.
Suddenly, when it becomes costly to them, they reverse that policy.
Right. And isn't it also his first day in office that he halted the Keystone XL pipeline project? Right? So that's, kind of a significant act. It just shows like this is what I'm committed to, right? But then, okay, well, it's getting unpopular now.
Right.
Fuel costs are going up too much. And so I'm going to have to kind of come back this way. So a lot of the stuff is just, political pandering.
Yeah, and so it's not clear how many people really realize that or realize the cost of these policies, like you were saying, in other countries that have taken this even further than the United States.
Yeah.
You know, that hurts regular people, right? I mean,
Yeah.
all the last couple of years when we've seen high prices, average Americans have been harmed by that significantly, by high inflation and high gas prices. And we should know now how bad that is for regular people. I mean, I know the elites and a lot of economists and a lot of reporters, they don't seem to take inflation seriously. They don't seem to take the harms to average Americans very seriously.
Right.
But it was the number one political issue in the recent election. High inflation was. And so, even specifically talking about gas or energy, that's something that is very bad for average Americans.
Yeah.
And so that's partly why Powell is saying, look, we're not going to get involved with that, right?
Yeah.
But they're getting involved with it anyway.
Wow. So is it obviously the Fed is not sticking to its mandate then? Like, could it, in the same way that it changed the definition or reinterpreted its mandate about diversity, equity, and inclusion, does this mean that they're just reinterpreting their mandate again to include the climate stuff, or are they just kind of ignoring their mandate?
So, it's hard to tell from what Powell is saying. Again, on one hand, I think he's right to say we don't want to be involved with this area. If Congress wants us to do something about trying to promote green energy, Congress needs to assign that, and this needs to be passed through the congressional system, through the democratic process, right? And I think that's true. But at the same time, I wish he was going further and being more self-reflective about, okay, the Fed is actually doing some of this stuff, even though he's saying that they're not.
Right. And there's also the NGFS that you were talking about earlier, the Network for Greening the Financial System. So, just to touch on that just a little bit again, what exactly does it mean if you sign up for an organization like this, if you become part of this? I mean, are you mandated to take place in these activities? Like, what is the cost of signing up there?
So for these international agreements, a lot of times there are no real penalties for not complying. They do. So, for example, the Federal Reserve is part of some other agreements like the Bank for International Settlements and the Basel Accords. We're members of the Basel Accords, and they do monitoring where they have groups that go out to each country and look at their policies in their banking system to see if the regulations are in compliance with Basel.
Right.
So there is some monitoring there, but what we don't know is whether the Fed is being truthful to this international organization, that's part of their plan is to encourage the development of green energy, or whether they're being truthful to the American people that their plan is not to encourage the development of green energy. And so we don't know yet. We don't know what internally what they really believe. Or as you said, maybe Powell believes something, but the people at the Fed that are creating these policies, maybe they have different views. So we
Right. So
don't
there's
really
some
know.
cognitive dissonance there maybe on his part as well, right?
It could be.
So there's another kind of organization that's a little bit similar maybe. It's called CORSIA, which is the Carbon Offsets Regulation for Aviation Emissions, something like this, right? And all of these OECD countries joined this a few years ago, right? And at first it was the same kind of idea. This is the parallel I'm drawing, which is we're just going to monitor what you
Right,
guys
right.
are doing, right? And just see, what kinds of emissions are coming out. We're going to encourage carbon taxes. We're going to encourage you to raise the rates of airplane tickets and things like that. However, any country who signed up to CORSIA in 2027, it becomes mandatory. And so, you have to wonder as well, even if these things are not mandatory now, this is the direction that, countries are going in full speed ahead, right? So
Yeah, I mean, just being part of this organization means that we're participating in their conferences and participating in their activities,
Right.
and that some people in the Fed are involved with plans of how to affect the green energy sector and how to promote that in the United States.
Yeah.
And so any involvement means that we're, doing something about it, whether we're being explicit about it or not.
So let's say for somebody who doesn't really, think about this as a bad thing. Like they think, what's the big deal if we're, moving towards green energy and governments and the Federal Reserve and all kinds of other organizations are signing up for this. And it's basically now happening with the governmental institutions and ones that are closely linked like the Fed. I mean, what's the big deal that the Fed is going to put pressure on banks and things like this? What would you say?
So this is all happening outside of the democratic process. Some people are okay with that, right? I think there are some people that know that they can't get things passed through Congress, and so they're passing that off to these agencies to create these new rules, even though they're not created democratically. And other people think like, no, we should be doing it through the democratic process. And so for people that are process oriented and believe in democracy, they shouldn't want these agencies going out on their own and making these policies that are undemocratic. I think a lot of the agencies, including the Federal Reserve, lean highly towards one party, the people in those agencies, and so then you get the problem that, well, these agencies aren't really independent; they're politically oriented, and even though Powell is saying we're not subject to political influence, well, if you have everyone in the same party that's at your agency, you're going to act that way, whether it's
Look at how it went for Twitter. I mean, you had 99% of people employed there who were on one side of the political spectrum, right? And we saw how that turned out. So, I mean, you can say, again, one thing and do something completely different.
Yeah, and so if you're, if you're having all of the government's policies being dictated by one party, that's something that will clearly upset the other half of the country for everyone that is not in favor of those policies and give them less faith in the democratic process and want to, in fact, tear down these agencies. I think if you believe that the Federal Reserve and if you believe that bank regulators and things like that are good and important, then you should want them to not be politicized. This is especially true in terms of monetary policy. So, if the Fed is independent because their monetary policy is better when it's not subject to political influence. So, for example, the Federal Reserve is supposed to be not beholden to the federal government because in countries where the president or the dictator, whoever, they can just call up the central bank and be like, hey, print $1 billion and send it over,
Yes.
then they end up with a lot of inflation, right? And so part of our reason for having an independent central bank is that we get better economic outcomes that are better for all Americans when we do that. And so we want the Fed to stay independent. And the more that they're getting involved with these political policies, the less independent they're going to become, the worse outcomes that we're going to have for all Americans.
So on the topic, not of the Fed, but more of, let's say, green industry or so-called green industry, whatever you want to call it. Because I know that you're a guy who's really big on decentralization, right? And DeFi and things like that. I mean, just a little bit of a tangential question, but thinking about the market-based solutions for going into renewables or going into newer technologies, like an actual market-based technological advancement in certain industries that say, if people want this, and there are producers who want to produce it and there are consumers who want to consume it, well, then the market can do that. Like, how is that different than, government dictating or Fed getting involved in it?
Right. So for people that would like to promote the green energy industry, doing it in a clear and transparent way is better than having it done through political pressure or backdoor through the Fed, trying to push some industry when they're really not supposed to. And so if we were going to do that through Congress and explicitly subsidize, we already subsidize solar panels and wind and all these different areas, right? And if we wanted to increase that subsidy, we could. The most common proposal from economists is a carbon tax. And so we would be taxing companies that are producing a lot of carbon and, disincentivizing the production of carbon and maybe taking that money to giving it to other like green energy or some alternative to that. And so those things are all, well known and talked about. I think when you mentioned just decentralization and the market in general, I think a lot of people don't realize that we're going to get a lot of these good things even without the government subsidies. So as economies grow, as people become more prosperous, they want a cleaner environment. They want lower carbon or whatever we need that makes the environment clean. And we can see this already happening in the United States, that carbon emissions in the United States have been declining for decades. People that are worried about climate change, they all have it in their head that it's getting worse all the time, and there's all this stuff in the news about how terrible it is.
Right.
But really, U.S. carbon emissions have been in decline.
Yes.
And that is largely because of the market. It's not because of any kind of regulations.
Right.
It's because natural gas, which is a cleaner type of energy than coal or oil, has been really taken over in the market. And so this market response has been producing cheaper, cleaner energy for the United States and reducing fossil fuel production. And so I think that is something that's already been happening, and that is how the market's going to continue to work.
And what's interesting about that too is that it points to market-oriented solutions being better than anything that the government can centrally plan. And like, I'll use Germany as an example. They shut down a whole bunch of their nuclear facilities, and now what they're doing is they're opening coal facilities.
That's right. They're mining coal because they've shut down nuclear.
Right, which we can actually argue like this is, a less clean way. It's more of a polluter. Like, so you have the exact opposite outcome of what you're purporting to do.
Yeah. I think, nuclear energy, if like anyone that's worried about fossil fuel production and carbon production should be in favor of nuclear energy, and it would be much more widespread in the United States. But, that's not a Fed policy.
Right.
That's the kind of stuff that Jerome Powell is saying, look, if Congress wants this to be done, they should pass a law to do it. We don't want to be politically pressured to try to do this. It's not our job. We wouldn't be good at trying to pick what industry, nuclear or solar or whatever. Like, the Fed doesn't have any expertise in that area. They don't know how to promote those kinds of activities. And so, I think he's right that they should stay out of that. I wish they would be more honest about the things that they're doing, and not be saying one thing and then doing another. We mentioned the social stuff. The other area that is specifically about distributional is the last resort lending that they did in the COVID crisis. So in COVID, early on, the Federal Reserve, we knew when we started the lockdowns and things early on in the COVID period, this is going to be bad for the economy. Yeah. And so the Fed was pretty quick in reacting to start doing some monetary policy even before, like when the economy started to decline, they started putting money into the economy so that once we started the recovery, it could bounce back really quickly and not be something that they were having to catch up with and were behind the curve and slowing that rebound. So they did that. That was probably a good idea, even though I don't totally agree with the way they did it. But the thing that they also did was they started a bunch of emergency lending facilities, just like they did in the 2008 financial crisis. They revived several of the facilities that they had from 2008 and then started doing new ones too. Now that's a little bit weird because it wasn't a financial crisis. There was no financial emergency. They were saying there's an emergency in the financial system, but people weren't having problems borrowing and lending. There was no freeze up of liquidity between the banks.
Right.
They said, well, there's a lot of volatility, but that's because everyone is selling their stocks. Like the stock market took a big dive, right? But are we going to declare every time the stock market goes down, this is a financial crisis and the Fed needs to come out and do all these bailouts, right? Like that's totally unnecessary.
Yeah.
But even beyond that, they did a lot of things that they shouldn't have done. in terms of not just lending to banks and financial companies, but lending to non-bank companies as well. So the Federal Reserve, because they're in charge of the banking system, they can be the lender of last resort to banks. And on occasion, if there are other financial companies that are tied to the banking system, the Fed can lend to those. So in 2008, AIG, that was an insurance company, they were heavily involved with several banks, and they made the argument, I don't know if this is true, but hey, if we fail, a bunch of other banks are going to be harmed as well. We need a bailout. And so the Fed bailed out AIG, and they had the right to do that with their emergency lending authority because it was linked to the banking system. But they didn't bail out non-banks, and they were asked to, right? In 2008, Ben Bernanke was asked, hey, you need to bail out General Motors, you need to bail out all the U.S. automakers, because if they fail, that's a problem for the whole economy. And Ben Bernanke said, that's not our job. The Federal Reserve, we lend to the banking system and maybe to some related non-banks. But if you want to lend to regular companies, Congress needs to do that. That's not the Fed's job. And that's what happened, is Congress passed TARP and ended up lending through the Treasury to the auto companies. The Fed was not involved with that, right?
Yeah.
But when Jerome Powell was asked, will you lend to non-bank companies? He said, we'll do whatever we can to support the recovery.
Yes.
Right? And so he started lending to, regular non-bank companies through the primary and secondary corporate credit lending facility, I think is what it was called. They did the Main Street lending program where they were lending to regular companies. That could have been done through the Treasury. Instead, it was done through the Federal Reserve. And they did something that other Fed chairs said they would never do, that is lending to state and local governments. Previously, Ben Bernanke and Janet Yellen had been asked, some of these states are failing. Will you give Illinois or New Jersey or some state that's going to default? Will the Fed come in and help them? And they'd always said, lending to state and local governments is not our job. Jerome Powell said, we will do anything we can to support the economy.
So what I see here, I'm actually thinking to, something that ties in with AIER and AIER's founding, which is, of course, the New Deal.
The New Deal.
Right? And that
Right.
piece by Garrett Garrett, which I can maybe link below. So this is somebody who was a critic of the New Deal, right? And what he talks about that in there, and this is what's coming to mind, is that you have this big event that happens that shakes people's world up, like the Great Depression, right?
Right.
And then you see, hey, we have another event that kind of shook people's world up. And then a great way to consolidate power, basically, is through the administrative state, through recovery. And this seems to be kind of, it's like that panic button was pushed.
Yes.
And so all of these things happened. The Fed was maybe reactive at the beginning. And now that all of that has been established, it's like a whole new era for the Fed. And now it's like they're just drifting, and they're doing all kinds of things which would have been unheard of, you
Right.
know, including by former Fed chairs and even Jerome Powell himself. Maybe.
Yeah. I mean, I think you're right about that. The similarities to the New Deal are true in a couple of ways. And so one is that there's a big event and people say, somebody's got to do something, and whoever has the plan, this is something, therefore this must be done.
Yes.
Right? No matter what it is, whoever's got the plan, that's what people are going to want to do, right?
Yeah.
And so climate change is kind of like that, hey, we've got this thing that people are saying is a terrible threat, we've got to do something. And so people are willing to do something, whatever that thing is. And the second thing that you said that is also true in this case is, well, it's not being done by Congress, it's being done by these independent agencies. You know, Powell is saying, look, this is not our job, we're not going to be climate policymakers. If Congress wants to do that, they can do that. Mm-hmm. But the reason Powell is being pressured to do this is because those programs don't have the support to be passed through the democratic process. And so people are trying to get around that by having the Fed do it instead.
Right.
They're pressuring the Fed to do stuff that wouldn't be passed through the regular democratic means. And so that's why, you know, Powell is trying to resist this, but we've seen already, you know, the examples that we've been talking about, mm-hmm. He's been willing to do things in the past that are not part of the Fed's job. He's been willing to talk about social issues and inequality and get the Fed involved with that, even though they said they were never doing that and that's not their job.
Yeah.
He's been willing to bail out non-financial companies, which previous Fed chairs had always said, that's not our job. You know, lending to state and local governments, they'd always said, like, that's not our job.
Yeah.
You know, again, even Janet Yellen, who is in favor of some of these
Right.
policies and doing them at the Treasury, when she was at the Fed, said, Like, that's not our job. And so, all of these areas are ones which weren't passed through the democratic process, were a little bit outside of the Fed's scope, but close enough that they could make the case that they could do it and started doing it anyway. And so even though I'm glad Powell is saying we don't want to be a climate policymaker, I wish he would take that more seriously and end the areas in which the Fed is acting as a climate policymaker.
Right. And I mean, actions matter more than words. That is just like a kind of a basic law.
It's true, right.
You can say anything you want to anybody. It doesn't really mean anything unless there are actions behind it. So,
So there are some actions that Powell could take here.
Yeah, that's what I was going to actually ask you next. Like, what could he do, and what do you think should be done?
Yeah, so the first thing is that I think they need to withdraw from the Network for Greening the Financial System.
Yeah.
I mean, that's clearly at odds with what he's saying, that the Fed should not be specifically picking certain industries, specifically promoting the green energy industry, and yet they're part of this organization that is devoted to specifically encouraging the green energy industry, right?
Yeah.
So that's a pretty clear contradiction. I think they should be withdrawing from that.
Yeah.
Another thing is that, I think that they need to be more careful about the distributional effects of their regulations and be careful that the regulations, like if they want to talk about banks' risk to climate-related events, it needs to be things that the banks are really have on actual risk, an exposure to. These long-term events are not things that are really actually risky for banks. And the things that they're worried about in terms of short-term emergencies, there's kind of no evidence for that. And so they need to be looking at only plausible but unpredictable events, right? And what is the potential exposure? It's not clear to me that there really is any, but that's what they should do if they want to.
You wouldn't just shelve that like altogether?
Yeah. So if they once they start paring this down to like realistic but unlikely events, I think they might find that no, actually banks have pretty good risk controls. Again, we talked about insurance, that banks are already doing flood insurance and all these other things that are basically the same. And so it's not clear to me that there is any scenario that they need to be testing here, but they need to be more careful about that. And then the other thing is, I think that they should have to explicitly do a cost-benefit analysis. So these policies, there's no evidence that they're providing to the public that says these kind of risks are material for the banking system, that they're real risks that we should be worried about, or that the policies that we're implementing will actually make them better. I mean, I think it's clear that there are costs to these policies in terms of the banks that now have all these extra hoops they have to jump through. That's expensive. It reduces lending, and that's a problem for the whole economy.
Yes.
I mean, there are studies that find that regulations on the banking system reduce employment and have bad effects for Americans, significant, like harmful effects. So that's a problem, obviously. But in terms of the costs, they affect some, but they're specifically costly to the energy industry, right? If the Fed is going to promote green energy and then cut off the fossil fuel industry, like the whole oil industry, that's a big problem. And so they need to be specifically looking at the costs that they're going to be creating through these policies.
Right.
And I should say, it's actually not clear that the Fed does any cost-benefit analysis already. They claim that they do. This is another area where Jerome Powell has said, we do cost-benefit analysis for all of our regulations, right? And I think that's just not true.
Yeah.
So I think maybe we've talked about this before. I did a study where I actually went back and looked at the biggest bank capital and liquidity regulations since the mid-1980s.
Yeah.
I looked at 27 different regulatory proposals. And the way that these work is the Federal Reserve and all the financial regulators, they go through what's called a notice and comment process. And so they put out an initial proposal about what the regulation's supposed to be. People give feedback and make comments about it, and then they go look at those feedback, and then they come back and make their final rule.
Yeah.
And a lot of times it's really exactly the same as the first proposal. Maybe they'll change some very minor things, but so it's not clear that they really take this seriously. But part of that is supposed to be that they do a cost-benefit analysis that's part of the proposal. Here's what we think the benefits and costs are going to be. The Federal Reserve is actually exempt from that. So they're,
Wow.
yeah, so because they are independent for their monetary policy, they also have applied that to their regulatory policy as well. And so they don't ever do cost-benefit analysis. A lot of times they'll do these regulations in conjunction with other agencies, FDIC, for example, the OCC, the FDIC and OCC are other two big bank regulators, and they are required to do
Okay.
these. And so sometimes in conjunction, they'll issue these joint regulations. Of the 27 regulations that I looked at, in 5 cases, only 5 of 27 did they even claim that the benefits exceed the cost. And it turns out in each of those 5 cases, if you go in and read the details, they actually don't have any evidence of that. Once you look at it, they actually say, well, the evidence for this is qualitative. I mean, we don't have any numbers, right? So we can't actually say that the benefits are bigger than the
We
costs.
feel that they were.
Yeah, right, exactly. We just believe that they are. We feel like this is the right thing to do. So it's all based on their feelings. There's no actual evidence that the magnitude of the benefits is bigger than the magnitude of the costs because they don't have any quantitative studies.
I'm really passionate about this. Like, what are these guys going to use? Are they going to still have, pens and computers and things that they can actually work with if they want to divest from fossil fuels? Like, I mean, that's, that just, it's common sense right there. Like, that's a perfect cost benefit kind of situation where you're like, well, what are you going to do when you can't produce the tools that you need to do your job at the Fed anymore, where you can't mass produce all of these items? I mean,
I'm sure before they get to that point, they will realize that it's a bad policy, right? It's like the joke about what did socialists use for light before they had candles?
What did they-
Electricity.
oh my God, exactly. Well, exactly. That's
Right.
it.
We're on the road back to candles.
Right. We laugh, but
It's serious.
it is.
So back to the Fed. So the Fed, including Chair Powell himself, right? Fed Chair Jerome Powell has said we do cost-benefit analysis. But as far as I could find, I don't think they've ever done a quantitative cost-benefit analysis for any of their regulations. And so obviously, I think they should be doing that for all of their regulations. But specifically in this case, because climate risk is so controversial, we need some evidence about where they're getting this information, how they think these climate risks are going to manifest, and how they believe they're going to affect the banking system.
Yes,
And
absolutely.
show that the risks that they're mitigating are going to be that the benefits from that are going to be greater than the costs that they're imposing on banks.
Yeah.
And so if they're not willing to do that, then we really can't believe Powell that this is strictly about bank risk. It's not, he claims this is not about dictating which industries are going to be winners and which are going to be losers. It's just about making sure the banks aren't taking too much risk. But if they're not showing us how they came up with these regulations in the first place, then we have no reason to believe that, right? We have no evidence for this claim that this is just about bank risk.
Well, I think that we're going to have a lot more to say on this in the future. Because this is, we're not really at the beginning of it, but we're probably closer to the beginning. As you said, we're not yet at the point where we're going back towards electricity. Hopefully we never get there. And we're not at the point either where, the Fed is wondering if they'll still be able to use their laptops.
Right.
But, these things can pile up quickly because all of this stuff sounds to me more broadly like central planning. And we know historically how those things have gone, right? And disasters can pile up quickly. So is there anything else that maybe you'd like to say on the topic?
I'm happy that Fed Chair Powell is saying that we don't want to be climate policymakers. I wish that they would take that a little bit more seriously. I worry about the direction of, in general, if Congress wants to make more climate policy, I'm a little bit worried about how that would turn out. But specifically about the Fed, I wish they would be more transparent about this, and I wish the press and academics would really question them about these areas where what they're claiming seems to just not be true. And it seems to me that that's something that we should be asking about and talking about. And so I appreciate you having me on to talk about it. And I hope our viewers will question that as well. And maybe we'll see more questioning of the Federal Reserve in the future.
Yeah, that's great. Thanks so much, Tom.
Yeah, thanks a lot.